Hello everyone, this is Winston. How's you guys doing? Today is Tuesday, May 12, 2026, and today market suffered two bad news today. So we have core CPI at 0.4%, which is harder than expected 0.3, and overall it's very hard. CPI we have it seems like inflation is coming back stronger because of the war. And with CPI year over year, last is 3.3, expect 3.7 and come out 3.8, even harder than a hard expectation. So that's a real big deal today. And second of the bad news is we have the escalation of the war. So that's why Nasdaq go down a lot. You see, but what did I tell you? The position now in stock market, we have a lot of bear, which means people like the stock to going down, and they may or may not bet the stock to go down, so they make money when the stock going down. We have a lot of those people going on, so violent sell up, but and violent short squeeze. So overall about flat-ish. Down a couple basic point. The SP 500 almost flat, so it came way down, but squeeze right back. A little bit weaker with the Russell 2000, and to the surprise, we have even squeeze higher than in the Dow Jones, our superstar silver. So it's squeeze. It's go down, right? It general go down, but then it's go back up, and even higher than yesterday close, and now make new high of this run. The previous high is right here. You see the line? Yes. And yesterday is make a new high. Today just recently make even a new high in silver. So silver, when it's going down, it's go down with the stock market, but it struck it up faster, and then even go up more. And when it's up day, it's up a lot. With the escalation of the war, we have oil going up, so not a surprise. But now it's going down 1.2%. So even though we have some action going on, let's do to 30 minutes. We have some action, right? But they not really spook the market. You know what I'm saying? It's not like they're up 10%, like 30% at the beginning of the war. So now people kind of chill out a little bit. Regarding about positioning, we seeing a lot of people right now buying oil. So so the thought that the war may be over soon is changing. So now the sentiment is the war is prolonged, and we better have some exposure to oil. So a lot of people buying oil right now. Hence the action kind of weak. Do you see? So far, we have a new potential candidate for our fund is the Kun. Extremely crowded short. So it fit the criteria. It also have a news failure yesterday. I mean today, yesterday section, and right now is at resistance. So I think we will try to short it, and the stop loss around right here. You know, if it's surpass the high, then it's been the bull run continue. But I think it's worth a shot to shortcut. All right. Let me see. And then with the inflation going on, we have the bond selling off quite a lot. And unlike stock, we have a bounce, a very decent bounce. We don't have any bounce in bonds. That's a little bit trouble, don't you think? Yeah, the 2 years same thing. They sell off, no bounce. How about Bitcoin? Bitcoin is still good. The one good thing about Bitcoin is keep hovering at the resistance. You know, so it's still good. This is very strong resistance, and if it keep going on, if it keep moving like this, it's a better chance to test this level at 100K. Yeah, hopefully go there. Copper make new high. This is the future chart, but at copper spot, it's already made all-time high. So the inflation, it seems like it's coming back for real, and you better have access. You see, do you guys remember we have I predict we have 2 states. So state 1, we need to own war assets like Lockheed, Boeing, oil. But then the state 2 is hyperinflation, and seems like that's what's going on. If you go to the DXY, which is the dollar index, right here is the amount that right here is the war, because when wartime, people buying dollar, right? It's almost erased all of the gain from the wartime. And with bond is going down and with no bounce, it's a little bit dangerous for the dollar strength. It seems like nobody's $1 anymore. And on that thought, let me pull up. So this week, the Prime Minister of India, Modi, asked their citizens to consider stop buying gold and silver to support their forex currency strength. But what interesting is in 1967, the same event happened. Is the Indira Gandhi appealed to the Indians, don't buy gold. And what happened to that? From the late 1960 to 1980, gold exploded higher globally. And in rupees term, the move was even more brutal. And this is the lesson. When government tell their own citizens not to buy gold, they're not usually means your jewelry. You know, they're worried about the pressure on the currency, the pressure on their own reserve, and the pressure on the financial system. So something must going on in India. The majority of their oil come from the Strait of Hormuz, and now the strait is closed. you know, I'm trying to connect the dot, and it seems like India is in trouble, or at least that's what Modi signal. And you know, if the government tell you not to buy gold, seems like good reason to buy more gold, don't you think? Alright, that's it for today. I will see you later. Bye bye.